personally, what I believe is that when it comes to cost of funds, it shouldn't be a double digit.
Okay.
I mean, it should be a single digit. So anything below 10%, I feel it's cheap money.
That's cheap money.
But because maybe over the years we have been borrowing at a high rate, even 15, we are happy.
Okay.
But some countries are borrowing. So let me give you a typical example. There are industries or companies in US and there are companies in Ghana. Now, when it comes to cost of funds, Ghanaian companies are paying between 20 to 30. The US people are paying between 3 to 5. So in effect, no matter the import duties that are put on, imports, what happens is that once they are getting money at a very cheap rate, they are already beating you with that 25% margin, right? So which means that no matter what you are to import, looking at the efficiency and the rest, their goods will be cheaper than what is here. And that's where people will find it convenient to import and than to maybe buy locally. So we don't, in any serious economy, you don't joke with interest rate. And if you look at historical facts, you realize that countries with low economic growth and has those high interest rates because they need to convince people to by raising the rates to get people to invest with them, right? But if the economy is growing, everything is fine, then the rates must come down to span out economic growth. And I think this is the best opportunity for us. I think we have never witnessed that before to get inflation around 3%. You see treasury bill around 4.8, and then lending rates also trending downwards. It's a very good opportunity for us, so all of us, to take advantage of it and go into serious industrialization. I always say that it looks like countries like Ghana, looking at the revolution of countries where people move from agriculture to industrialization to service and the rest. We are not seeing that massive industrialization stage. So and that's why there's that high unemployment. So in this economy where we are seeing the rates coming down, businesses are, borrowing, massively, because at least they don't know what will happen in the future. So they are taking advantage of the opportunity. And once, people can, borrow at that low rate, clearly very soon, we will see the economy transforming. And that's what I'm really saying. Very soon we will see that transformation happening.
I see. Well, but if I am going to go by your view on in terms of cheap money, it means that we are not there yet.
We are not there yet, yes, because see, even our neighbor like Cote d'Ivoire, their rate is very low. Cape Verde interest rate is around 3 to 4%. Wow. Cape Verde is an African country. Namibia rate is below 10%. Cote d'Ivoire rate is also below 10%. So we have not gotten there yet. But I know history.
So how then are we celebrating too early?
Yes, because this is the first time we are experiencing something like this. Do you get it? Okay. So I don't think that's
it's valid.
Time.
It's valid
yes,
to
for
celebrate.
us, we are seeing progress. Do you get it?
What is the rate currently?
The lending rate. So now the policy rate is around 14. So the GR is around 11.
Okay.
And the GR is the standard rate they use to add their risks, and then so if it's 11, it means that you can borrow between 11% to 19%, depending on your risk profile. But personally, I have issues with this risk-based lending, because see, the problem is that, assuming, let's say the GRR is 11%, as a bank, because that you feel the person is a bit risky, you are adding another 9%. Normally, what I see from that is that, the person you feel is risky, you also charge that same person high interest rate.
Yeah.
Now, you see, the person you feel is risky, what kind of business is the person doing? And looking at the rate you are charged, do you believe that in 1 year, that person can make that much money? So maybe this is also the time for banks to move away from risk-based lending to maybe performance lending. Kenya has done that. I think just last year around November, Kenya government and their central bank came to the point that they are abolishing this whole idea of risk-based lending, because they have realized that it's rather increasing non-performing loans.
But could that be the reason why we are also seeing a lot of non-performing loans?
Exactly, because the point is, if you give a loan to a high-risk person, and because of that you are charging that person high rate, what does it mean? You see, you are seeing the person at high risk because you believe the business like it collapse. So you want your money quick. Yeah. You see, the whole idea is that you want to get your money quick, so that no matter if it extends to a particular year, you are safe. But the point is, you are rather putting yourself in a very high risk environment. You are asking that person to go into high risk business to generate enough returns to give back. Mostly they are not able to do that, so they end up using the same capital to pay. How sustainable would those businesses? Would those businesses be sustainable?
Right.
Clearly, no. So with this whole issue of risk-based lending, and because of that, looking at the risk profile of maybe they should move away from that, maybe to graduated. If you charge the person, let's say 20%, and the person has made full payment for the first year, clearly that risk is no more there. So you have to come down a bit, because you're giving that same loan to a rich company or person at a very reduced rate. That person who can even make triple of that money because they have big investment, you are giving to the person at a lower rate. And then the one-man business, the small businesses that are already struggling, you are suffocating them again with high interest. What happens? When they get to a point they can't make enough profit, they will run away.
Yeah, that's
as simple as that. Do you get? And in a typical business, it's difficult to make a net profit of 30% in a year. What I mean is that if you take all the costs away from the revenue, it's difficult. And the cost of money is around 20 to 30. What are you doing? You are suffocating that business person. So there's no way the person, if the person is even paying, then either he is doing a whole lot of things and making sure he doesn't default. That's why he is doing that. And that is why personally I love the current environment.
Okay. Just before you get into that, so you're saying they should move from risk-based lending to
performance-based lending.
Yes,
the performance-based lending is where you look at. So, for example, let me give a typical example of there's something called Islamic finance.
Yeah, I've seen that. I've seen Islamic.
Now, what they do is that when they borrow you money, they don't believe in interest. And the reason they don't believe in interest are three things. The first one, they feel like it's a cheat to the borrower, especially the borrower is not able to make more than the interest rate you are charging. Okay. Which means that then the person end up paying with capital and the business will collapse. The second point is that they also believe there's also a cheat to the lender, because in times of inflation where business are making high profit, the bank will lose from that angle. And then the last thing is that they believe that, when you do this kind of, if you charge interest rate, people doing businesses that with big profit, maybe may have social impact, but because it's making them big profit, those are the people that will be attracted to lend. So those into social things that affect us, positively in terms of our social implication, you're not going to, because those things don't earn much. So for example, like people, if a business is into children care, elderly care, how much should the person get from it? So you will never be interested in that, but those ones are important. So because of that, they forbid interest. Now that's how they do their business. You come for money, then you agree that when you make profit, you share it in a particular ratio. When you make loss, just be frank. Come, tell us you have made loss. You won't pay anything for that year. That's why I'm talking about the performance-based lending, where when you give the money, you allow the person to bring his financial at the end of the year. Look at the profit the person made. Either you share the profit. Maybe you can't do that because that is more rigorous way of doing it. But then you can think of, okay, this is the profit the company has been making or the business man has been making, 30%. Okay, so to be sustainable, then I'm charging a rate of 15% or 10%. When that happens, it gives the businessman the comfortability to, do his business without that serious consequence of defaulting. Are you getting it? Yeah. And that's why the Islamic fund, and that's why, they want to come to Ghana. The Bank of Ghana has set up Islamic banking and the what they call it, committee to look into it. I'm sure the traditional banks are against it because this has happened before. And they resisted it. But this one, I'm not seeing a lot of resistance. Okay, but I think that's a good thing, right? Yeah. Risk-based, personally, I feel it's a cheat to the poor people, the one-man businesses and all that. Let's move away from that. Let's go to performance-based lending.
Let me get something well. So for the performance-based lending, or for the for that, if a bank wants to, if you want to go for a loan go for a loan from a bank, and does a bank have to see your performance in the past?
Exactly.
Now, I'm asking that because, so how about a new business that wants to set up?
Okay, so
how would they be able to get
for
there?
a new business, they even need maybe 2 years or something free interest loan.
Yeah. Okay.
Where looking at, maybe you look at what the person is presenting. If you feel it's something, profitable,
Okay.
you can allow that person a space of, let's say, 2 years moratorium not to pay interest.
Right.
Because see, the moment the person comes for loan and you are charging that person fixed interest, what it means that no matter what, you see, he's not even testing the business. He doesn't even know what will happen in 1 year's time. But you are asking the person.
Isn't that valid for the banks to be now?
And that is more counterproductive.
Okay.
Because when you do that and the person realizes that he can't make that money to pay back, what happens? The person will run away. Exactly the point.
Then you have a lot of NPLs.
Exactly. So why don't you allow the person to be in business for some time, maybe 1 year or so? The person just needs to come and present. You see, that's why I said in the past our banks have been a little lazy about lending because treasury rate was already high. They didn't really care so much about it. Do you get it? So if you look at our bank's portfolio in terms of investment, about 80 to 90% is in treasury bills. Do you get it? Because they feel that is safe.
Yeah.
No, you look at some countries, and let me get to them. There are some countries that a lot of their profit is not coming from interest. Banks, typical banks, but they get a lot of their funds coming from fees and commissions. And the fees and commissions, what the bank does, for people, whether advice, all those kind of, apart from just the loans they are giving you. So, for example, you can give a businessman loan. It's just not just that. You can also provide other services. Like maybe analysis of what is happening, giving him a different perspective for a fee. And if you go to the outside world, banks makes a lot of money from those things compared to, because you see in the environment, the rate is very low, 4%. So they are not really interested in just the lending aspect. They are more interested in the other service that they will get fees and commission.
Okay.
Here, you look at fees and commission, it's just about 2%, 10% of the whole company's revenue. The whole bank's revenue. Do you get it? So I'm sure, things are changing. I'm very sure you get them.
I see. So the trends that we are seeing in terms of the decline in the rates, is it something temporary or something that will be around for a while?
Okay,
or so maybe even more structural.
The only challenge that is happening now is the issue of the U.S. Israel Iran war, which is likely to affect oil prices. When oil prices affected, clearly inflation will come back, and when inflation comes back, clearly central banks need to take action. That's why they will start increasing monetary policy rate to curb inflation. Do you get it? And so I think I listened to the Bank of Ghana governor last week.
Yeah.
He was talking about, in fact, in his expression, he's just hoping that the war does not continue for long. Because if it happens, there's nothing they can do but to go back and start increasing the rate to curb inflation. Do you get it? So clearly, it largely depends on this external factor, especially when oil prices are involved. And looking at now the trust and everything happening to the extent that US now want to even go to the ground. The risk is high. So for now, we can't say it to be sustainable for long. If it wasn't the war factor, then I'm sure that this can last for about 2 years. But now that the war is affecting inflation again, and it's likely to even lead to effect, it's going to affect exchange rate and a whole lot of things. Maybe we may not, see this over a long period. And that's why I'm saying that businesses need to take advantage now.
Okay.
Do you get it? Before the war escalates and inflation starts and a whole lot of issues, we can take advantage now. We can take advantage now. We need to think about expansion. We need to think about, and the banks are also willing. The banks are now writing letters to companies to come for a loan, and they are even proposing a very flexible. They are now proposing a very flexible rate and a long tenor, and then this is a very good even to individuals, not just business, but to individuals. GCB, for example, is approaching a lot of company employees to get a loan around 15%. over 7 years. That's a very good opportunity to
7
buy.
years.
Yes. This is a very good opportunity to buy your dream car that you have been thinking about at a very lower rate, around 15%. So as far as it lasts,
but it's not advisable to take loans to buy cars, is it?
It depends on a lot of factors. Because some people, when they get a car, the benefit that comes out of it will exceed the cost.
Okay.
So it depends. That one depends on a lot of contextual factors.
Okay, so typically, okay, let me just announce the lines in case anybody's listening to us. Exactly 31 after 9. This is a business breakfast on Z101.9 FM with me, Nicho Hammond. And this morning we're having a conversation. We're looking at the declining rates and whether that is actually going to lead to economic transformation for us as a country. Typically, that is what must happen. But we want to see whether indeed that is what we are going to see here in this country as well. You're free to join the conversation. We're streaming live on Facebook at ZFMGH and on YouTube at Z Multimedia. Please feel free to drop a comment on the live stream and we'll read them for you. Also, you can send us a WhatsApp on 0544321019, 0544321019, and we will read your messages for you as well. You can also call us on 03039566641, 03039566641, and we'll read your messages. Sorry, we'll give you the opportunity to share your thoughts with us this morning. My guest is John Kyei. He's a financial analyst, and he's helping us have this conversation this morning. John, let's continue the conversation. So, So indeed, interest rates are declining, and that is good news. From what you said, for businesses to be able to expand. But I want us to know, how do lower interest rates typically affect businesses, especially SMEs?
Okay.
How does that work?
Yes. So the whole point is that once lending rates is going down, maybe at first was around 30. Typical SMEs, you're getting loans at 30. It is now coming around 15%. Let's say 15%. It means that the cost of funds have reduced by half. Do you get it? Those who are already in existing loans, maybe they can talk to their banks for negotiation. They need to negotiate to benefit from what is happening now. But businesses, clearly, it means that your costs of funds have reduced. And now you will be paying less than what you are used to pay when it comes to your loans portfolio. And this is the best time to borrow. Because we don't know how long this will last, and we don't know how far it can even go down again. It's very, looking at, I don't think banks will go lower again, right? So this is the best opportunity. Getting a loan at 15% to let's say 19% is good. And I'm very sure that, if we start, borrowing maybe aggressively to expand our business, the costs will not be too much on us, and we can do what we want to do. So clearly, SMEs, so now for them, this whole idea of risk-based lending has always increased their costs. But I think now we are seeing that coming down. If banks are willing to even borrow to individuals at that lower rate, then businesses that are being sustainable and profitable will get it even at a much lower rate. Because the banks don't have any option. The point is, you either give to government at 4.8% or give to individuals even at 10, 12. Look at the profit we are making out of it.
Even that, if you want to even give to the businesses, then I think that you don't have to increase it because of the risk involved.
Exactly. So you see how do it translate to us? So normally, you see, when these things are happening, we should not be in a rush. In terms of if you go for a loan and the bank says, I'm taking 19%, reject it and go to another. You see, let them see that, we want to also benefit from what is happening. Do you get it? So, and that's how it can translate. When they realize that, people are not coming for the loan and what they are getting from government is too small, they'll be forced to also reduce the rate. Do you get it? So now we should not be in a hurry. That once you go for, we should also be able to reject the bank's office. If you go to a bank as SME and the bank is charging you 20%, go to other banks. Now there are a lot of competition now because the treasury rate has lowered. There are a lot of competition among the banks. to get more customers in order to, because they have targets to achieve. For the year. I don't think they anticipate something like this. Do you get it? So when we also make it a point that we understand the current economy and their rate must come down, it will force them to bring it down. Do you get it? So if you go for low 90, treasury bills around 4, I can't pay 19%. Right. So you should be able to negotiate.
What is a realistic rate that the
for
SME
now,
should go for?
I think 14. 14 is okay. The point is, you see, if the bank is giving you at 14, do you know the interest they are making, the additional interest compared to their previous portfolio? That is additional 9%. So they are making a premium of 9% from lending to you, right? And maybe that's the risk that we are talking about. Do you get it? So now the policy rate is around 14, GR is around 11, and mostly the lending rate should be 11 plus or minus, depending on the risks. And that's why I say I don't even believe in this risk-based profile issue. So 14% should be okay for businesses. Banks must understand that whatever is happening is for economic transformation. You see, in the past, if the investments we are doing is into government, which we all know the inefficiencies in that sector, we are not going to see any massive economic transformation. They must be partner to this agenda of transform the economy. So they should also, the objective is that, yes, we are part of Ghana's industrialization, economic transformation. So we also, able to reduce our rate to allow businesses to also expand. So that we are all, at the end of the day, we all benefit. It's not like the banks, because they are reducing their rates, they are losing. They are not losing anything. Because the point is, you can't sit in a bank and be making 30% in a year, all because you are giving money to people. Do you get it? You are giving just money to people. You must come into the business arena and support businesses to also grow. And when that happens, when businesses expand, the credits, people will also borrow more, right? And then you also expand your profit. So the whole thing is a triangular something that happens in an economy. Everybody benefits. Now, what the government is doing is that he wants cheap money. That's why he has fought to reduce the rate to 4%. Treasury rate is auction. So when they go and they are auctioning, but the government says, I'll only pay 4%. Whether I like it or I go. And they have been able to force, the financial institutions to also reduce their rate. That's why we also need to also fight for them to reduce the rate for us.
What affects the financial institutions?
You see, that's what I'm saying, that, you see, in some economies, they make more from fees and commissions. And these fees and commissions...
We don't do that here.
We don't do that here. Yeah. But you see, this whole fees commission comes from this supply chain finance, where you as a bank, you now support the whole supply chain, the whole supply chain business, where if somebody is importing, exporting, you are involved, you are giving advice. You are doing more than just the lending aspect. Do you get? When you do that, you also make more money from that. And you see, the issue is that sometimes some of these things are volume based than just small base that gives you huge profit, which even increases non-performing loans at the long term. Focus on volume lending. The point is, as far as you reduce your rate, more people can borrow because the fund is cheaper. And once they are borrowing, that small margin you are making, you even make more than the 3 people who were borrowing and paying that huge interest, and at the same time, if you're not paying and increase your non-performing loans portfolio. Do you get it? So, we should all be in this together. We want serious economic transformation. The government has led the way to make his... government says that I don't even want my investment to be attractive anymore. I want you to focus on the real sector. And that's what we all need to do. The banks should also focus on the real sector. Make it cheaper for them. Help them grow. Do you get? Be partners than just one profit. So we are just, giving to you at a high rate.
Okay. All right. So if I get you well, we're saying that businesses should be excited to take advantage of what we are seeing in terms of the economy. They should go into borrow, and they can do that. But they have to still be cautious anyway, I guess. Yes, they have to be cautious. What are some of the things that they have to look at to be cautious of?
Okay, so you see, in developed economies, we have history to suggest that when some of these things happen, it normally, let me give a simple explanation of the financial crisis.
Okay.
What happened was that as interest rate was declining like this.
Which one, here in Ghana?
I'm talking about US.
The 2008.
When the interest rate was declining like that, many people went to borrow money, and you know what they were using the money to for? They were using for real estate investment. So because the loans were cheap, everybody was borrowing and everybody was building. So there was huge supply of houses. And those times, because housing was a major problem in US, everybody anticipated that the price of housing will go up.
Okay.
And so let's all go into it. And everybody was, borrowing and using the houses as collateral. Do you know what happened? Then house price dropped. Now, because there was oversupply in terms of demand. Now, when that happens, they were not able to pay their loan. So the banks took over the houses. Now, when the banks took over the houses, they were also not able to give it out because nobody was, didn't have buyers to buy even the houses at a reduced rate. So the government has now bailed them out. So the government took over the houses and gave the banks money to survive. So normally when some of these things happen, we should be a bit careful of the kind of businesses that we are going into.
Okay.
Because you see, for example, when people say, oh, there's reduced rate, so let me go and build and rent. Everybody is going to build and rent. By the time you realize there's oversupply and the houses are there, and nobody is even renting, then what happens? You default on your loan, the houses are taken over, and another financial crisis can happen. So some of these things, you have to be very careful of the kind of investment that you do as a businessman. Do you get it? There are some assets that are very illiquid, meaning, it takes time to sell.
Okay.
Those ones, if you go and borrow money to do it, you may have challenges in the future, especially when there are issues of, prices of those things declining and the economy becoming a bit difficult.
Okay.
That will complicate things. So maybe let's focus more on investments that are a bit liquid. And I say they're a bit liquid, things like oil and gas, everything people are buying, selling. Do you get things like, I'm not saying that people shouldn't go into that long term. Just I'm saying we should be a bit mindful of that because, it has happened as well before and it caused a lot of havoc. Okay, so, these are the things that we need to, consider as far as the risk is concerned.
So are there some sectors that, so what, first of all, what types of businesses are likely to actually benefit from the declining rates?
I think,
or is it all businesses?
All businesses, but most often the businesses that are into very liquid investment.
Okay.
Because those liquid, like oil and gas, mining, every time you are exporting gold, you are selling petrol, diesel. So those ones we can easily make a lot of returns and even reinvest, borrow more, and do a whole lot of stuff. Do you get it? But there are some sectors like real estate that you can borrow the money now, get a lower rate. Okay, and then
even the building takes time.
The building takes time.
And then when you're done, you're not going to
take about a year. You are not looking for a buyer and a whole lot of things. Those ones you should be very cautious about
those ones.
You shouldn't be too excited and borrowing so much to do a lot of real estate. UT Bank first. I think it was one of the banks. Is it Unibank? One of the major issues that caused their problem was real estate investment. So most of their portfolios went into real estate. So when they were struggling with liquidity problems, look at what happened to them. So those investments, we have to be a bit mindful.
Okay.
By investment that the turnover is high in a year, those ones are good businesses to venture into. When I say turnover, like you can do it multiple times, you can sell it multiple times, maybe 20 times in a year, 10 times in a year. Those ones are good to invest safely.
But are there some businesses that may not feel any real impact from the lower rates at all?
Oh, personally, I don't think so. Do you get it? Because every business needs money, and every business needs cheaper money. Cheap money to finance their operations, including even NGOs. Do you get it?
Yeah.
So I think every sector in this economy must take advantage of the current situation and expand. Because the expansion even brings employment. So you see, sometimes you look at the overall effect of what is happening, you realize that it's going. That's why I said it's going to can lead to massive economic transformation.
Mm.
When business are getting cheaper loans and they're expanding and they are employing more people, you can see the cycle continues and everybody becomes happy. Do you get it? So I mean, it's something good. I mean,
something good. All right,
yeah.
let's bring it home. I mean, but just before we bring it home, let's talk about the banks again.
Okay.
Now, you said something that created the impression that the banks will not go through any risk at all, because I know that once the rates are falling, they'll have to lend at a very lower rate.
Yes.
And once they are lending at a lower rate,
Yes.
they also fall at, I mean, get into a risk. Or
okay. So you see, one major issue you need to look at, especially when it comes to the banking industry, is that most of the monies they are using, about 90%, is depositors' funds. I want you to understand from this point. Now, how much do they give to depositors in a year on our savings? Most often, just around 1%, 5%
yes.
in a year. Then they lend to people at, let's say, at first, 30, 25, right? Now, look at the margin they are making. And the question is, they were becoming more prosperous. They are building a lot of branches. They were making serious money. Do you get? Because most of the monies they are using are already cheap to them. But they make it expensive to us.
Right.
Do you get it? So it's just going to reduce their margin. But they need to understand that in this current economic environment, things have changed. It is no more the banks making cheap money again.
Right.
They need to work extra. The historical fact that Ghanaian banks always rely on high interest rate. It should be a thing of the past. The economy is transforming. So they should also understand it and understand how they can also, diversify their businesses. If I was just into treasury investment, you have to think about something we're not doing. You look at Western world banking, sector, how they do their things. Then you also learn from it. Because you ask yourself, countries like US, Turkey, even Japan, they have banks, right? And I was explaining to you that their rate is sometimes even zero. So how do they make their money? And they are surviving.
They're still surviving.
Exactly. So I feel here the banks were making supernormal profit. They only use.
It's now time for them to also give back to.
and they were always using this risk-based lending, risk-based lending.
I think
that conversation should be over.
Okay.
You should focus on performance-based lending.
All right. So now let's bring this closer to home. I mean, for the ordinary Ghanaian, someone who may not be running businesses, what does all of these things mean to them?
Okay. So you see, once the lending rate is going down, and people borrow to do a whole lot of things.
Right.
They borrow to fund their children's education. They borrow to medical bills. People borrow for different reasons.
Yeah.
And they are all going to benefit. Because you see, once the commercial rate is down, clearly the individual lending rate will also reduce. Do you get? Because the point is, at first, we were not seeing monetary policy feeding into lending rates. But now, because of the GRR, it automatically hits the lending rate. And I don't think as a bank, in your conscience, you feel you should give loans to individuals at GRR plus, let's say 12%, 13%, 14%. Do you get it? So what it means is that investors are also going to benefit. They're also going to get loans that whatever they were using for, especially teachers, police, soldiers. I don't know if you have seen pay slip of some of these people. You see there are a lot of loans. And they pay so much. I know some people can't even borrow just 2,000 and are paying 4,000 in just 2 years. Oh, yes, because the person is an individual. Okay, so, and they feel risks. But the question is, sometimes you see, you just go down. A policeman or let's say a soldier, a teacher who is with controller, which you are assured that you get your money through controller. What is this whole idea of risk?
So there's no risk.
Exactly. Really. So except maybe the person is not doing a formal employment where then there's no means of getting the money. So
you have to chase them and all of that.
But the point is, if all the non-performing loan, what do they do to it? They write it off. So
in the long run,
exactly. So the whole idea is that bring the rates down. And so to make people, there's a loan called, I don't know if I've heard of Snappy About or something. I know somebody who went for such a loan, and the person is paying ridiculous rate in a month. Then the question is, what do you expect that person to use their money for? And in that short period, you want the person to make that huge profit to pay back. Now, if the person is now struggling to pay back, then you send your people to go and chase after this same person. You have charged him so much that there's no way he can make that money to pay back. So sometimes the basis of our lending, which has always been this risk-based, as I said, Kenya has taken that out. And when they took it out, even just a year, they have seen a drop in their non-performing loans.
NPLs.
Yes. Because you see, if you give me a loan in a year and I know I'm supposed to pay 15%, 10%, clearly, even the kind of business that I'll go into will not be too risky. You see, as when you give me a loan of 100,000, you are saying in 1 year I should pay 30,000. You know what you are telling me to do? To go to very high risk that can give me high profit. It is only high risk business that give high risk profit.
Yeah, that's true.
High profit. So what is that? You, the bank, you are rather even tell the person that you are high risk, going into high risk business.
And it affects them.
Exactly.
Right, so
and they'll come back to you.
As we're trying to wrap up, our time is almost up. Sometimes when I'm having conversations, I don't know where the time goes. But anyway, so should people be thinking of borrowing more? Should they be thinking of saving more? Or maybe changing their financial behavior in some way?
So in this current environment, clearly savings will not yield much.
Okay.
Because savings is normally into treasury bills when you save with a bank.
Right.
So not yield much. So now our thinking should be more about business. You can decide to buy shares, right? And you can decide to go into business. This is the right time to, because assuming you invest, you put 10,000 in a bank, in a whole year, you are going to get 480 cedis. 480 cedis in a whole year. I will even spend the money. So clearly, those investments are no more attractive at all. So maybe we should think of going into business or buying shares or doing real asset investment. That's where the money comes from.
But even the stock, Ghana Stock Exchange currently is being bearish for the past.
So the issue is, you see, one thing we should never overlook is that, you see, in times of war, the stock market is affected. And I always advise people that when stock prices are rising, don't follow it. You see, the mistakes people do is that you don't follow the market. When I say you don't follow the market, is that when it's already rising, you don't go into it. Because there's no asset that moves in a straight line. Always they have to come back, resettle, and go again. So the best time to do investment in shares is when prices are falling. That's the best time to do investment. You wait for a while for it to drop and then you invest in it. But you know, when the stock market was doing about 50%, 40% was being announced everywhere, then all of a sudden everybody wants to go into stock. Do you get? When it happens that way, clear the price will start crashing.
Oh, okay.
But as the price is crashing, don't lose hope.
Okay.
Just wait and start even buying more. Buy it gradually. As it falls, you continue buying.
Okay.
You realize that by all means the market will turn again. And we have to know that shares are for long-term investment. It's not that short. You want 3 months profit too. It doesn't work that way. So it can even take you 2 to 3 years to be able make your profit. Yes.
Okay, so we said all these conversations to ask whether we are leading to an economic transformation.
Yes.
So I want to know what is our economy well structured to be able to benefit from the declining rates?
Yes. So you see, yes, just that there should be a lot of education. You know, whatever is happening, I said maybe, it's not, we must really communicate the benefits so that it gingers people's interest.
Who must take
advantage? The government must play his part. Media must play their part, especially as we are discussing something like this. You know, it gingers people's interest. Oh, okay, so this is what it means. This is what I can do. Do you get it?
Yeah.
If you don't educate, the thing will be happening, and by the time you realize, the thing is gone. So we must educate more. We must, spread the information more. Banks should also reach out to to more people to borrow, because now they need volumes, not just the margin.
Okay. So bottom line, are we on the brink? Are we on the brink of economic transformation, or just experiencing another cycle?
I think the agenda of the government was to do all these things to spare private investment.
Okay.
And I think that path is now clear. We are moving gradually towards it. The only risk now is just the war risk. But if the war ends and it continues like this, trust me, 1 year's time, we will see where our economy will be, especially the private sector part.
Okay. John, thank you very much for your time. I'm really grateful that you joined me this morning for this all important conversation, and I hope that our listeners have picked a thing or two and they will apply to their financial decisions around this time. But I'm really grateful to you for coming.
Thank you, and thank you, listeners.
Okay. All right, so that was John Kyei. John Kyei is a financial analyst, and he joined me this morning talking about the declining rates and its impact on businesses, and also whether we are on a journey or on the brink of a transformation, economic transformation, really. And so from the conversation, there's been quite a number of things. But businesses, the point is that you can go and borrow. But when you go and borrow, asset to where church or hunkakra. So that's the banks who bring the rates down for you so that you can pay. And John Kyei says that a significant one, or a smart or a very, for lack of better words, a realistic rate for now is 14%. So you can actually negotiate to that point, and then you can get into business, expand your business, do more things, and be able to grow, so that in the long run the economy will be able to do well. That's a goal at the end of the day. So that is that. For individuals who listen to us this morning, the whole thing is that you can also borrow into sectors that you think that you can actually get a yield and pay back. So that's a good time to go into borrowing. Savings might not be the best, but also you can also look at investing, go into shares and all of that. And he says that the best time to be able to invest into shares is when the market seems to be crashing or is bearish. And then when you invest more at that time, you'll be able to get the returns in due time. So that will be all for business breakfast on Z this morning. That's all for our roundtable discussion. We're back again tomorrow for some more interesting conversations. Until then, please keep listening to Z 101.9 FM. My name is Nicho Ebi Hammond. I'll see you tomorrow.